reviewing, or actually going through 2021 expectations. And we have a couple of questions. The first one is, what do we think is going to happen in 2021 in terms of the economy? If things have changed, what will stick? Will people work from home? How will this affect their geographic choices in terms of where they want to work? Some good stories there. And also, how long will the government maintain this stimulus? When will this finally lead to the end of deflation? Specifically around rent prices and other services that we have stopped using. This is the Beyond Return Show, a forum about business, markets, financial planning, and more. And we're here with Montebello Avenue's founder, Robinson Crawford. Robinson is a certified financial planner who serves clients locally and throughout the country. Robinson is in Phoenix, Arizona. And my name is Gabriel Kaplan. I'm the founder of Wealth Habits, a financial planning firm. I'm a financial advisor, and I help people invest and manage portfolios for them. Given my background as a CPA, I also help people, I help clients figure out strategies to optimize their taxes, something that's coming to an end in 2020. So let's start with what should we expect for 2021 in terms of the economy?
Tough question. I personally
very broad, very broad.
Yeah, I don't make economic predictions. There's people who just do that. All they do is think about like detailed economic statistics, try to project them forward. I've read arguments that they're not very good at it. That's very hard or impossible to do.
But it's always fun to predict and look back.
Don't get me wrong. I'm going to come back with some guesses. Don't get me wrong. But I guess my intro is I don't purport to be an expert in economic prediction or statistics.
How confident are you in the vaccines, though? That's my first question.
In the vaccines, I would say I'm quite confident in the vaccines, despite a lot of kind of institutional failures in 2020 that should have maybe shaken me about the CDC or do
you remember that when they said do not wear masks and then wear masks? That was
this should.
I understand. Like people learn about this stuff as they go through.
Right.
But there's some common sense there.
Yeah, I would agree. Yeah. So if my confidence had been totally shaken in all these institutions who have work together to make these couple vaccines, I would be pretty skeptical, but I'm fairly confident about it. I tend to think it's going to be a really good thing, and that it's going to generally increase confidence in people's willingness to go do things, and people's investment into themselves and thoughts about the future. A lot of the economy is kind of animal spirits, how everyone is feeling about spending money or investing things or starting a family.
Totally.
Confidence. Yep.
What about, I totally agree with what you said there. I'm actually fairly confident about the vaccines. If we have one that's going to fail, we have backups. Unfortunately, not all of them are going to come out at full-fledged production immediately in, the first 2 months in 2020, but as they roll out, I'm sure we're going to see an uptick in traditional economic behavior. Now, what about the pent-up demand? People are talking about there's a ton of pent-up demand in the economy. People are wanting to travel and they want to spend money. How sure can you be that there's still money left over to be spent?
I think there is money left over to be spent in terms of actual dollars in the system, right? Whether we achieve economic growth or velocity, I'm less confident of that one. Possibly pent-up demand for travel, but given this year's numbers, I think people bought what they wanted to buy when they had money, right? I know savings rates went up, and I know a lot of people probably had their budgets all in all go down, right? They spent less. They tightened the household belts a little bit in 2020, but I'm not convinced that belt's going to loosen and that people are just going to spend a ton of money and come roaring back in 2021. That doesn't make sense to me.
Yeah, I think that the only area where I think there's a tremendous pent-up demand is flying to the beach somewhere, far away, or to a mountain to ski, or if you have the capability to fly anywhere, travel far away, that's where the pent up demand is. So restaurants, bars, yeah, for sure, because those are things you couldn't do. But I think that's where the pent up demand is. It's in the activities you were prohibited to do. The unleashing of bar hopping will happen in 2021.
I can see that. I can see that happening for sure. I guess I don't think of it like I don't think everyone's going to go buy all the things on Amazon that they held off from buying in 2020, right? Like that's not happening.
Exactly. I totally agree with that. So
Best Buy did
we've
fine. Amazon, they like a bunch of retailers. People bought the clothes and the stuff they wanted. I think they even bought the cars. I think auto purchases were actually pretty decent,
yeah.
even though usage and gas usage is down. Um,
If anything, auto like the whole auto, I don't know, factories and stuff. They stopped production. They limited the amount of supply, so the inventories are running low. So now that the change of the models, coming through in 2021, they're not discounting so much the 2020 models because there isn't any left to be sold. So I think in anything, autos are in a good position now.
Can't comment on that one specifically. I don't really know, but I think you may be right. But yeah, bar hopping, restaurants, travel, definitely bullish on those. And those are probably the places that have been hit the hardest, right? Those are
Yeah. And there's one other comment. If there's theater to be seen, I mean, if there's theater companies still working, I think theater will be also something that people will want to see. The only issue is that I don't know if there's much left of the theater infrastructure.
yeah. I mean, the theaters are still physically standing, right? Hopefully, maybe the lenders have seized on them and will start putting on shows themselves, right?
But the question, I mean, it's been terrible here. Like I know a couple of people work in the theater business, and if unless you're like in the Hamilton production or on the Disney productions, like there's a strong likelihood that your theater company has gone bankrupt. They just couldn't withstand not working. They just don't have the reserves. They don't have the ability to work around this. So that's kind of unfortunate, but it leads to a new beginning and source of that industry, a reorganization of talent where they go. But on the other hand, you lost a ton of value there, having organizations already built up. There's been rumblings around, like, when you read these transcripts from meetings between business leaders, many of them are saying that business spending is below trend line, and that's just a fact of the COVID situation. Um, but I do wonder sometimes, if that's something that we could have seen regardless of COVID, right? There was already talk about a recession in like 2020 after that 10-year expansion, or a little bit, yeah. So
Yeah, a highly leveraged corporate sector already coming into 2020, right? A big chunk
yeah,
of business cash flow going to interest payments. I what do you think about this framework of thinking about spending in aggregate as some combination of business spending, consumer spending, and then the government spending, right? Fiscal spending, right? I don't know the
yeah,
breakdown
that
between those three in terms of actual drivers of the economy, but
yeah. I think that was like the whole framework they used to justify the massive stimulus, right? You had the thinking was that the consumer was going to spend less and business is going to spend less, and as a result, the government had to step in and truly, uh, expand their spending massively to make sure that the aggregate demand wouldn't fall to levels where there was going to be really destruction in supply organizations. I know there's a lot. These are a lot of like difficult, I would say, concepts, to understand for the layperson. But that's essentially, you just have someone stepping in and spending enough money in the economy to make sure things don't just fall apart.
right, right. Whether it's manufactured demand or not. Yeah, that's your point about business spending being below trend line certainly checks out for me when I'm thinking about the way businesses interacted, for example, with employees. A tremendous amount of people got laid off. Business leaders had to make really tough decisions and say, are we going out of business, or are we trimming back tremendously so that we can afford to stay alive for however long our runway is, right? At some point you run out of
Yeah.
cash. And of course, this equation is tremendously different for big business versus small business. And that is reflected in the relative stock prices, right? Large caps versus small caps. You've been much,
Yeah.
much safer. Small caps got absolutely decimated in March and April, and have not had the same access to capital or returns in the equity markets as large caps.
Yeah. The one thing I think is actually pretty interesting is that you have these small caps, coming back to life. That with each piece of news about the vaccinations and the ability to, of the economy to withstand this like COVID stuff, you see like the graph of the small caps just slightly coming back slower and slower, like catching up to the large cap. But it's still going to be tough for them. There's one area that jumping in now is like credit. Credit is something that large caps have. Just they have an abundant of ability to get credit, especially if their balance sheet is in a good position. Small caps, it's much more limited. Uh, that's just the fact of being they're in a riskier position. Speaking of that, there was a transcript I read where Wells Fargo was speaking, and they were saying that the safety net for people, not high income earners or people who are wealthy, but rather the middle class to the lower middle class, is that their safety net, the balances that they had in their checking account and their credit card balances, have deteriorated substantially in the last couple of months, and that's kind of concerning, and more or less maybe has what was led to the final policy push of giving up more stimulus to the person, right? The $600, and I mean, I don't know how much that will help, but it's something there, just maybe to push them across the finish line while the vaccine is being delivered. What are your thoughts on that?
That's really scary to hear that internal data at Wells Fargo suggests that the little guy is hurting quite a lot. I don't doubt it. I think anecdotally that checks out. I'm thinking of things like food banks having record demand for people just trying to get food on the table, right?
Yeah.
So that's scary to hear, but I think confirms probably some
Anecdotal evidence.
my suspicions.
On the other hand, you have also reading more transcripts around here. It's the around advertising. I think it was a Comcast transcript, and they were talking about how many firms have during COVID they just limited advertising because they didn't have a way to sell these products. Like airlines, they're not going to advertising. They're not going to go around advertise, their tickets. If you're not going to travel until this stuff is done, right? The vaccinations. Hotels specifically. I don't know if you remember all those advertisements from places in the Caribbean. I don't know if you
No,
watch TV at all.
no Caribbean ads for me.
No Caribbean destinations for you. Well, I guess I was targeted.
Yeah, you probably were. Stressed out New
But
Yorkers was your cohort.
yeah, or Florida,
All
right?
right.
I do think there will be an advertising comeback. I think that's something we'll see in 2021. A massive push by a lot of companies, advertising their products, advertising their services, advertising travel specifically. Yeah. Any opinions on that? Have you started seeing more travel advertising yet?
I haven't. I don't have a big opinion on whether advertising will make a comeback or not. I have some friends in the ad business who I'm sure would be thrilled to see that that's the case. But
Yeah.
no, not especially. I think that's an interesting proxy for maybe business leader confidence, right? How big that ad budget is a really big indicator of whether leadership thinks that this is the time to play offense, right? We can go and really have a good year economically if we go and press the gas pedal. So I'm interested to see if that lines up.
Yeah, some I was reading through the transcripts, right? Some of the business leaders saying that 2021 is already, in their view, is going to be a better year than 2019, right? So you're comparing 2021 to 2019, which leads me to the second question: is like when you start to look at financials, right? How do you, when you compare companies, will it be common to compare 2021 versus 2019 instead of 2020, right? Like,
Yeah.
when you do revenues year on year comparisons, do you actually say, X pandemic year?
Right. EBITDAC, EBITDA minus COVID. Yes, for sure, people
Yeah.
will be doing this.
The other question is, as we said, geographic and demographic, changes, choices. We discussed this previously in the 2020 episode, where there's a lot of companies moving to Austin and several business leaders moving to Texas. Any thoughts on 2021, how it will roll out? Do you think that will stop once we have the vaccinations kind of like covered?
I don't. I think this change is underway and is not going to turn around. But I'm on the balance side of this. I think both sides exist. I think the death of New York is overstated. Ditto with San Francisco, but the growth of Texas, Florida, Arizona counts as that too. We have really big population and job growth here in Phoenix.
Oh, I was looking at the statistics. It's like one of the highest growing,
It is.
like in terms of percentage wise, not just folks, but
Yep. Yep.
is it just Phoenix? Is it where else?
Phoenix and suburbs is the big one. There's a few companies
Yeah.
that have invested like places that are hard to call suburbs, right? Like a 40-minute drive out of town. But
Yeah.
around Phoenix is growing tremendously fast, both in terms of economic activity, population, everything.
How are the real estate prices?
Exploding upwards. Especially for starter homes, single family homes that are affordable for most young families to get into, you can expect to get. I have some family members who run a real estate portfolio, and they offered on something over the weekend, 15% over asking. Same day it was listed, and they were outbid. There were 30 offers over the weekend on one place.
Is there more construction?
There is. There's a ton of new apartments in all sorts of different parts of town. There's definitely a bunch going on, and a bunch of companies have moved sales
relocated?
or HR or some portion of the company to Phoenix or Scottsdale. It's a popular thing to do.
Got it. So the downtown is starting to build upwards.
Definitely. They have like in the 11 years I've lived here, the downtown has exploded in terms of just number of buildings and viability of living there, restaurants, everything like that. COVID was obviously weird for that, but I think construction probably paused, but is definitely still going. I looked at Zillow yesterday for apartments downtown, and there's tons and tons of high rises. They're not all full, right? They haven't filled them up yet, but the developers are definitely betting on continued growth of downtown Phoenix.
But that would be really interesting. I mean, I think, if anything, what a lot of California people are probably moving in.
Oh yeah.
So I mean that to me is a very good sign of progress. Yeah, hopefully there isn't so much my not in my backyard kind of attitude just to construction. The good thing is that there ample land to construct in the suburbs. Like, can you expand much further?
Phoenix can go out and out and out, similar to Las Vegas. Basically, to the east and to the west, you can just keep going and going. There's some mountain ranges on the north and south that sort of keep it geographically a little bit like they've already built to the mountains, basically in the north and south. But east and west, they could go a long ways out. You can spend, even with no traffic, an hour and a half getting from one part of what is still like the Phoenix area to another. Right? You can go like a long ways.
The next topic is bankruptcies that, around companies that haven't been able to adapt to new consumer behaviors. There is this saying around the business community that, things will return to normal. Obviously, most people will say that they'll have been changes in consumer attitudes that will permeate and be sticky. The question to me is always like, what is going to be, how sticky is it going to be, and how will this affect, other companies? I think the biggest one is like the big box retailers and the department stores. You know, uh, they've been continuously attacked from the online presence. They've finally gone like omni-channel, which was like the retail word of the year in like 2018, I believe, or 2016. Like there was like omni-channel, omni-channel, omni-channel. That's all you heard. Um, and I have a feeling, I don't have evidence for this, but a lot of companies weren't able to like adapt to that omni-channel. Like they weren't able to integrate their inventory to their website. All that stuff is coming back to bite them really hard. During COVID, but afterwards too. If they haven't been able to implement it before, what hinders them from implementing it afterwards? It's hard to like really predict which ones will actually survive and thrive, and which ones will actually, I guess, perish along this transformation. And there's these other ones I think that don't have an omni-channel presence or anything like that, but are still surviving and thriving. I mean, I don't know whether this is like Dollar General, but Dollar General, they don't deliver. But they have done incredibly well in the previous recessions. Who says they can't do well when we come out of this again?
Fair, fair. Yeah, no, there's going to be both sides of those. There's going to be companies that totally, totally fail and don't capture the new behavior, the new demands of their customers, and um, others that do. What came to mind when you said bankruptcies, I was thinking energy in particular. Energy's
Yeah.
a rough go of things, and the future doesn't look extremely bright either. You can find smart people arguing in both directions of whether, by 2025, will we be using oil and natural gas still? I tend to think we will, and that we won't have, accelerated the green revolution that fast by that time. But that's another area where like some companies, I want to say Chevron, I'm not 100% sure on this, but someone like Chevron has made a carbon neutral by 2050 pledge, and other companies have completely rejected it. Like I want to say Shell was like, no, we're not investing in that at all. Like we don't buy this. We are who we are. We drill oil, right, and sell some natural gas here and there. We do pipelines, whatever it is. So that's another one that comes to mind of potential bankruptcies as a result of the failure to adapt or failure to see this kind of big thematic change.
One of the big concerns I have is, or not big concerns. I mean, I'm concerned for the energy companies not adapting. But have you seen the recent announcements of electric companies from the regular auto sector? Like not just Tesla, like you know, other companies.
Volkswagen, etc., about their electric cars.
Yeah, yeah,
Yes, they're going full electric.
yeah. But they're coming in a couple of years. But this is going to happen. You're going to have choices, and prices are going to continue to come down. Batteries are still expensive, and I think it's batteries like 70% of the price of the vehicle, right? The actual drivetrain, which is the engine itself, is so much more cheaper than the regular one, and the maintenance is cheaper, and the amount they have like thousands of less parts, I believe, right? The electric ones.
Fewer parts, and fewer of those parts are moving. Yeah.
I wonder, like, do they have gears? How's it like? I mean,
They do have a
the way,
transmission. Yeah.
yeah, but it's not as complicated as the as um, petrol, or
Yeah.
that's how the UK calls it.
Yeah. Gas powered cars. Yeah.
Yeah,
Internal combustion engines. There you go.
internal combustion engines.
Yeah.
Yeah, that's the thing that it just I don't I think that it might be slow. It might be happening. Everybody talks about it. They're incredibly optimistic, but it's a slow moving like snowball thing that just increases in size, and before you know it, you just have no demand for gas.
Yes, I
And
totally agree with this. I would tell you that, like, look at the difference in electric vehicle sales, which are definitely growing, and Google Trends, right, are growing for electric vehicles. but that growth rate is much, much less than, for instance, the share price of Tesla. And I want to share one left field prediction with you about Tesla and Elon specifically in 2021. Some listeners will know that a guy named Michael Saylor, he's the CEO of a business intelligence kind of software company called MicroStrategy, tickers MSTR. Michael Saylor famously announced, I don't know, a few months ago that he was going to use a big chunk of the corporate balance sheet, just the cash on the company's balance sheet, to buy Bitcoin. He did it very publicly. He has done more. And then he's gone on kind of this PR tour, being on every podcast that he can get his face on, saying, this is why I did it. Here's what we were facing. I didn't want to buy treasuries. Cash is a melting ice cube, yada, yada, this whole story. So he's become very popular. He's gotten a lot of good PR, and MicroStrategy stock has exploded upwards largely as a result of this, right? You can look at past years. It was a sleepy company. Not very many people were interested in it. Profitable, but not growing very fast. My prediction is that Elon Musk, who has tweeted plenty of times about Bitcoin, is going to jump on this train, grab the good press, grab the headlines and the controversy and everything that goes with it by buying Bitcoin using one of his company's balance sheets. I don't know that it'll be Tesla. It could be SpaceX, Boring Company, whatever else he's involved in. Tesla would be the big one, right? The real like splash, right? Because it's got a huge balance sheet and is a big part of like index funds, right? Like we talked about on the last episode. But Elon Musk using a corporate balance sheet to buy Bitcoin. That's my 2021 prediction.
I don't see it as a like crazy prediction, honestly. Like using a small portion of the balance sheet to put it in Bitcoin to neutralize the effect on the massive money printing that's going on right now in the US doesn't seem like crazy. For me, the bigger aspect is the implementation. Like how can you implement such a move in a safe and in a way that doesn't really hurt the shareholder? Because when you have such that kind of person coming into the market, he'll definitely move it. And there's only one. When he buys, he'll move it up, and when he sells, he'll move it down. So,
Yeah.
not sure how efficient it'll be for someone like him to do it.
Right.
But I mean, he's known for doing crazy stuff and doing it well, such as sending people up to space.
Right.
So who knows? Like, I believe him if he can do it. I would believe him. Yeah.
Yeah. The mayor of Miami, in fact, was recently, someone tweeted at him recently to say, hey, put some of the city's coffers in Bitcoin. And he responded that he was open to it. So I think Saylor was like the first in corporate America to start kind of speaking that language. I think Elon's right around the corner. He'll jump on this.
I think there's one more topic. I actually added this very late to my list. It's the opportunity for active managers. I think there is. I was listening to a podcast. I don't remember which one it was, but they were talking about that 2015 to like 2019, the delta between high value stocks and low value stocks, it's been growing over time, and right now there's such a high difference between high valuation stocks and low valuation stocks that indexes don't really do very well with that. They will just buy everything, and if your valuation of your company is very high in terms of like PE ratios or price over sales ratio, they will buy more of the expensive one and less of the less expensive one. So what they're saying here is that eventually things like this will regress to the mean, historic mean, whatever that mean is, but that is something active managers will actually benefit from, not so much index and passive investors. So they say that 2021 and 2022 probably could be very good opportunities for active managers to take advantage of this disparity that eventually will resolve.
I haven't looked at this year, but I feel that this year was a good opportunity for. Do you think, in retrospect, that in 2020 active outperformed passive on a general basis?
If you invest in technology, yes.
Right. Yeah. If you're the right active manager. Yeah. I don't know about that. Yeah. So whether I do think the value spreads are large, I think that's like demonstrably true. And I think it's true around the world. I think that that's been exacerbated by a bunch of factors: Fed, interest rates, really high quality growth stocks at the top, right at the big. If you just own the top, if you just own mega caps, yeah, mega cap growth, that's just been a tremendous bet for a lot of reasons. Whether that's going to mean revert in 2021, I tend to think that's a longer time frame bet. Like that, you need to give that one 5 years in a crock pot to simmer. But could it happen in 2021? Definitely.
That is the biggest question for me, is when will this kind of mean reversion happen? In 2015, you had the difference between, in terms of valuation between high growth stocks and regular value stocks was minimal. So it was an amazing year to buy, values to buy growth stocks and just hang on to them. And that has resulted in tremendous alpha for those that did that over the last couple of years. The question is, what should be that difference between growth and value stocks, right? What is an appropriate difference? And I'm not really sure about that, and I'm not sure how it gets resolved. So again, it's like always the same. It comes down to the same issues. Like, great, we know that this is true, we just don't know how it gets resolved, and that is, I think, the issue for this point. Now, in terms of risks, what do you think are like the 5 biggest risks, or like the top risk that you see that could really upend everything, literally? Like,
The recovery doesn't work. There's a lot of ways that could manifest, but I think that we don't get out from under this COVID bug, and we can't get people back to work. We can't stimulate demand. People can't go back to restaurants, bar hop, travel, and we have kind of a prolonged, more of the same period where this K-shape, the two outcomes of the K-shape continue to widen. That's it for me. That's the big outcome that's really scary and nasty.
yeah, I would say, like, for me the big risk is the vaccine implementation. So either like the efficiency starts to, or the efficacy starts to drop for some reason. Like right now it's very high, but then assume the virus mutates over time and you start to have like less and less and less and less efficacy. So to the point where, like any flu vaccine, like the virus mutates to something that's not recognizable by the vaccine. Now, what I've been told by other, people who are doctors, is that it's very difficult because the main method of transmission is what they're really vaccinating against, and so it's the way of the spikes adhering to the healthy cells, so the COVID cells adhering to, to transmit the information. So vaccinating if the virus mutates and it's away from those spikes, then technically they're not transmitting information to reproduce, and so as a result, like you're basically, it's like checkmate against that virus, right? So I think dollar weakness and the result of inflation would be another one. Yeah, I actually look at currencies worldwide. I look at my home country, Uruguay, and the currency depreciation there. You can have all the printing in the world here. You will still have more printing going on in other places, and as a result, the dollar usually gets stronger over time. I would say it has stopped getting stronger in the last couple of months. You look at Brazilian currency as just a straight path towards like the dollar strengthening for the last couple of years, and I think in the last couple of months it's stopped. I don't know what the answer is to this. I would like to see some inflation. I think it's healthy to have some sort of inflation. It's good for people who who owe money to the bank to have some sort of some sort of inflation. It reduces the weight of that debt on their personal income, as long as they are getting
Wage inflation.
income wage inflation. Yep. So if you have a mortgage that's $500,000 and you have more inflation in a couple of years, that $500,000 is worth less in their capacity to earn, as long as their earnings went up with inflation, because the mortgage hasn't really changed. So that's pretty good. The only downside to that is that if you have more inflation, you will have higher interest rates. The question is whether our economy can support that kind of interest rates. Chess game. Like, how I don't know how this is going to play out. Like, the Fed wants more inflation, but we want to keep the rates low. So, like, something's going to have to give, and that's what worries me. Like, I think that's the risk, right? Like an uncontrolled way of adjusting for this.
We're playing a delicate game of chess, I think, from a monetary policy standpoint, and the risks of that chessboard getting tossed to the side and the rules being totally rewritten is a really scary one. I agree with you. I think inflation, all else equal, is better for most people. I think that on the other side of this, the risk of maybe a Japanification, if you've ever read about Japan post, they had a big economic crash in the late 80s, and Japan had a similarly aggressive monetary policy for a long time and were not able at all to generate any inflation. In fact, had severe deflation for a long, long time. That's that scenario. I'm hearing more and more investors and people who want to talk about inflation, and I think inflation it's a really interesting and really tricky topic. Deflation to me is scarier and worse if that comes to be.
The one thing I will say, though, the difference between Japan and the US is that there's still demographic growth in the US. And in Japan, there isn't growth. There's reduction in
workforce,
in people, right? Yeah, in workforce. And as a result, if you have a reduction in workforce, you usually have a reduction in aggregate demand, which usually reduces prices. So as long as we have positive demographic growth, we should be fine. But the way we get to that positive number is immigrants. So we really need to have, an immigration policy that expands the number of people in the U.S. I think it's also strategic. I mean, this goes beyond the focus of this like conversation of like finance and stuff. I think it's from a strategic point of the U.S. If you want to remain relevant, you have to be a big country. And we won't be a big country in 2050 if we continue with this small demographic growth. We really have to like grow quicker. So it's your responsibility to have more babies.
Roger that, Captain. Thanks, Uncle Sam. We'll work on that. The piece that I want to highlight there, just for investors to think about, is that you don't only have to invest in the U.S. You can invest in consumers overseas very efficiently, very effectively in places that have better demographics, that are already growing, improved access to education, healthcare, protein, like you name it. That is available to you as investors. This you don't have to take a totally U.S. centric view.
Yeah, that's totally that's a very good something to highlight here that most people forget. I think the other side of kind of like tactical risks is the China-U.S. trade war, not ever going away, just continuing in different forms. I think the other thing I'm a little bit worried about is like the Eurozone stability. I think there's certain countries that have, taken on way more debt that they can sustain. Some of the countries, I think France was highlighted as one of those countries that's starting to surpass Italy in terms of debt over GDP. That's very scary. And then the final one, which is going to hurt people in the short term, is valuation sustainability. And it's kind of what we discussed earlier is like there's certain companies that have very high valuations based on their earnings or based on their sales, based on whatever way you want to value a company. You could look at it from a historical basis or comparable to other companies, and you will see that there are many more outliers, bigger outliers than before. And this is something that I think is pretty scary in terms of, if you have someone who's about to retire or someone who is retired and invested in these kind of companies and expecting to continue to get these returns, they could wake up to a very ugly surprise if these companies are revalued at a more historical basis.
Agreed. Temperance and expected returns, I think, is the prescription there.
Yeah, and the expectation of those returns. Yeah, I think one case that comes to mind is Apple. Apple, I think it like a couple of years ago was valued even at price earnings ratio, um, like half of what it is right now. So price earnings ratio today, looking at last 12 months of earnings, it's at 41, I think. And in 2019, in January 2019, it was at a little over 12.
Holy cow.
So, that is something that's pretty scary. That said, though, I have, very, um, I have very, very optimistic about Apple in terms of their earnings. I think their margins are going to go up because of their starting to exclude Intel, which is a major cost in their production, um, and also obviously scaling up the production of their iPhones, the new generation. But on the and also on top of that, as long as they sell more devices, their ecosystem gets bigger and they make more money. But 40 from 12 to 41, that's not something you can. It's a lot. And so if you have that kind of exposure, you should be careful. But all in all, I think hopefully this is good information. And if you like what you've heard so far, please subscribe. This really helps us continue uploading new content and creating new stuff. It gets us motivated when we see those like buttons. If you have any comments, feel free to ask any comments in the comment section. We'll be in there answering them.